one of the these are being driven by topic-wise by what people are telling us they need and what we know people need. So we've got about 9 people scheduled to be on the call today, and so we'll probably have some people joining us as we go along, and we'll get them engaged as we go. But we want to start with introductions of people who are on the call. So if you could just give your name, your position, and your organization, that would be helpful.
Oh, and actually, can you also give us the number of employees you have, please?
Okay, so let's start with you, Bobby.
Bobby Dale. I was recently promoted to Operations Manager here at the Arab American Cultural and Community Center in Houston. We have 1 full-time employee, and I want to say 5 part-time employees, and then a bunch of volunteers.
Good. Congratulations on the promotion.
Thank you.
Anybody else? Well, I know that one of the people we have on the call is, William Petar, who's the Director of Operations for the Arab American Association of New York in Brooklyn. He's relatively new to that organization, but brings a lot of good experience, including city government, to that. Anybody else on the call? So we'll catch people as they go along, or as they join us. What we're going to do is I'm going to turn the presentation over to 2 of the stars of the ACCESS Fiscal Department, Mariam Mroue and Ken Sitowski. But before I do that, just a couple housekeeping things. They'll be stopping for questions at a couple points. So at those points, we want to encourage you to ask any questions you have, share any experiences you have that might be helpful. If you would rather, there is a box on the bottom of the drop-down on your screen where you can type in a question or an observation. So feel free to use that. Otherwise, if you have, we're going to leave everybody off of mute, so you'll have a live line. If you have noise in your background that develops, please mute your phone so that that doesn't interfere. We appreciate it. So with that, I'm going to turn it over to Mariam and Ken, and thank you for your help today.
Good afternoon. This is Mariam, and Ken is right here sitting next to me. So we're going to go over a little slide PowerPoint presentation that we put together for you guys. And again, like Mike said, there are areas where we're stopping where you guys can ask us questions or give us how you want this to be directed towards you guys. Since there's only 2 or 3 people online, maybe we can make it even more one-on-one. We can see how that goes. Again, we're going to talk over financial management policies and procedures. Okay, like it's not working. All right, the purpose of this is we want you guys to maintain and increase funding levels. It is important to demonstrate strong internal controls to funders via strong performance during audits. We will review core processes that demonstrate strong internal controls and will help reduce the chances for errors and frauds. One of the things we wanted to talk to you guys about is accounting software, how important it is to have an accounting software that will keep your funds and expenses organized and separated. One thing that you should be looking for in an accounting software is if you are able to the capability of providing more than one department within that software. For example, ours, we have 8 departments with, that we have separated, but we also have, in those 8 departments, 23 funders within. So we were able to separate not only by department, but by funders as well. And so there's funds that we have that expand to maybe 90 different funders within our accounting software. It looks good to funders when you have that type of software because they really want to know if you guys are able to separate their funds and their expenses and build, because they don't want it mingled with other funds and expenses. So it's really important to look for something in the accounting software that will not commingle different funding sources and expenses. Some types of software that you can look at is QuickBooks. There is an online version of it. I'm not sure how much QuickBooks Online does, but the real QuickBooks, you are able to divide into funds and departments. Same thing with Petrie, and Dynamics is one of the softwares we have working for us here. And some of these softwares will give you nonprofit discounts. Some internal controls. Checks and balances, they're put in place to detect errors and fraud within the organization, and it helps you keep control of the books and the process that you have in place. It's really important to have separation of duties. Not one person does all of cutting the checks, receiving payments, and doing bank recs. You should have one person doing these 3 different things. That will eliminate fraud. It will eliminate your funders looking at you and scrutiny. It will just help for better internal control.
It will also, one important aspect there is it can also help, like she was kind of alluding to, is the appearance of the need for scrutiny by other parties, whether it's auditors or your funders, and actually can protect yourself as well, as if they had some suspicion of whether they saw some errors or thought something maybe even potentially fraudulent was going on. If you have just kind of some checks and balances, even if it's only 2 to 3 people in the whole office and you just have them separated between the 2 primary people, as long as there's 2 people touching, especially when it comes to funds coming in and out, especially if it's cash or checks from donors, if you see that piece, and the important thing is they want to see where there was a check and balance and see where it was accounted for that was coming in. And that can, again, that can protect you as well. So if there was suspicion, you can see, well, no, there wasn't. So it can kind of keep you above suspicion even personally if someone started to, for some reason, insinuate there was fraud going on. And then, again, that control's there, so they're more secure in continuing to fund you going forward.
Yeah, this is Mike. Just as an example, I had a conversation last week with an organization that's not actually a member, but it's another organization. And the executive director was a member of the board of directors, and in that capacity, which is fine, that's not a problem as long as you take care of some things, but she had also accepted the position of treasurer of the board of directors, probably in the absence of anybody else being willing to do that, and that just gives a people can be as honest as the day is long, but the appearance there is really bad, and because it eliminates one of the major checks and balances on the executive director being in a position to commit fraud. Some of this is appearance, but it's putting real checks and balances in place that deal with potential realities.
Again, like here we have a slide of the reasons for separation of duties, and it goes into if more than one person has their hand into the financial process, it eliminates theft and embezzlement. It breaks up the responsibilities from one person's hand to many different. Like we'll go over like what we mean by this a little bit further down in the presentation. Signature and physical verification processes are utilized, and security access is limited to offices, computers, checks, and deposits, and confidential materials are locked. What we mean by this is, for example, if you guys have numbered checks, which that's what we recommend if your system does not provide you with a where you can put in your generate the numbers, the number of checks. If you have, sorry, I'm kind of nervous. What we recommend is that when you have checks that are pre-numbered, they are always locked, and you know where you left off. With our accounting software, ours are blank, where the computer itself prints out the check number. We're not allowed to change that. So I'm not sure how you guys do it. If you want to type in and let us know, but they should, all checks should be under lock and key, and one person who's not the check signer has a key. Okay. Do you guys have any questions so far? Okay, we're going to move ahead. Accounts receivable. This is basically for nonprofits. If you have grants, donations, and memberships, this is money owed to you guys. And for the way we track it is, if we know we're going to be receiving money, we put it in our accounts receivable, where we know to watch out for this money that's coming in. We check this on a regular basis. We cross-check it with deposits. It depends on how it's being received by our organization. It could be received by a physical check, or it could be received through the bank electronic deposits. But there's always somebody double-checking to make sure that this is received. This is an example of what we would submit as a billing. So if we did this on a monthly basis, and we are expecting to receive $61,000, we'll put that in our accounts receivable. And if we don't get it within 60 days, we will contact them and say, we submitted you a bill on this date for this amount. Could you please let us know when we are planning to receive payment? Accounts payable. This could be in the form of payroll or for hourly salary contracts. Invoices that you receive, which could be your telephone, utilities, staff reimbursements, and mileage reimbursements. When accounting department receives an invoice and check, usually it always has to be approved by a supervisor or the director of the program before it gets paid or processed through payroll. To accounts payable. How we do it is we have a secretary or clerk who receives a request and date stamps it to verify the documents, and then checks to see if the documents are filled out properly. Especially with staff reimbursements, they will double check the addition and double check the mileage reports, and then they will submit it to the AP person. They'll submit it to the accounting staff member who is responsible for that program to approve for payment, and that accountant will give it to the AP person to pay for it, to pay the bill. And again, this is what we said. We pass it on to AP for processing. The AP clerk puts it into the system by invoice number or by date. Especially if it's staff reimbursements, we put it by date. We recommend 2 signatures on a check, so that way there's always if you don't have to the best way to explain this is if you have 2 signatures on a check, one of them could be a pre-inked stamp, has to be inked and signed by somebody. That will verify that there's checks and balances in place, because the AP clerk should give the check itself along with the invoices behind it as supporting documents for the supervisor to double check everything is accurate. And then that's when they sign the check, and the check goes out in the mail to be paid to the person. What we do as a canceled invoice is we attach a copy of the pay stub to the invoice itself, so that we consider it canceled and paid. This is an example of timesheets. I'm not sure if you guys fill out timesheets or you do electronic. We do electronic, so we eliminated this timesheet process. What we do for our funding sources, especially if they're federal grants, we do a personal activity log. Because some of our employees work on more than one grant, so we ask them to fill out a personal activity log on how many hours they work per day on which projects. So this is what we did over here for you guys. We wanted to show you that funding source 1, funding source 2, they could work 6 hours on one program and 3 hours in another program, for example. this is what we mean by if we receive an invoice, we stamp it as received, and the person initials it, and then, sorry, I just want to, so they initial it up here, and then, I don't know if you can see my mouse, I'm really sorry if you can't, and then we put in the code to be paid and how we want it paid through our accounting system.
Yeah, we can see it.
Okay, just wanted to make sure. Do you guys have any questions so far?
I had one comment.
I have a question. I'm sorry, go ahead.
Sorry, this is William. I finally figured out how to get the audio going.
Yeah. Welcome.
So, thanks. At our organization, so Arab American Association, we received a grant last year that's a combination of federal and state funding. Mm-hmm. And I just became aware recently that under federal regulations, we are required to do our timesheets where we account for activity, right, similar to what you were showing with dividing it by grant hour, but also it has mm-hmm. to kind of delineate exactly what the tasks were so that right. anybody looking at this could reasonably understand what the person was doing for what amount of time. Right. So I don't know if anybody else has federal grant money, but I don't know how to fix going backward, the fact that we hadn't done that. But this is something that I have to work with, and so I think other people should be aware if they get federal money.
Well, when you say you have to go backwards, you have payroll of the people you charge to the program, correct?
Right.
Okay, so are those people still working for you?
Yes.
Okay, so when you put it into the granting system for federal and state, were you dividing it that way, or were you just putting it as a lump sum?
Previously, we were working under the state's. The state gave us a template TDS timesheet report, but that
right.
didn't break up into sufficient detail for federal personnel activity report requirements.
Right.
So we have TDS reports that break up they kind of split state and federal work, but right. it doesn't give detail that they're asking on the federal level. So I'm still not sure how I'm doing that. But
this one just gives us the hours so we know how to divide it up into the to the funding sources. But our staff actually will list what they did for that funding source in their personal log that I don't see. When we get audited is when they have to prove that.
Right. Okay.
Okay, so you can have your staff, like if they did 6 hours, they could list of the activities that they did under that funding source. For you, you can divide it up to state and federal, but mm-hmm. it's really it's one grant, but it's state money and federal money.
Yes, correct.
Did they tell you how they're considering? Like, is it 50% federal or 75% federal?
It's actually kind of strange. In the proposal, the split was 45-55, majority going to federal, but in reality, in practice, it's dependent on our client's income level, and right. if they're below the poverty level, then they go federal, or if they can't prove income, it goes federal, and everything else goes state.
Right.
So.
Okay. I'm just trying to figure out what would be the best way for you going backwards.
Yeah, it's a tricky situation.
Yeah, because if it was a straight split, I would tell you just go back and straight split it, but it doesn't sound like it.
Yeah.
This is Mike. Can you take what they would describe as a typical month and extrapolate out from there? Because the month, though, a week might not give you enough variation.
Right. I mean, that might be a solution, but I haven't had time to look into.
Do you keep client demographics?
I mean, yeah, we have demographics, and we have information on all the clients that we've assisted in this, like that would fall under this grant.
Right.
So we could go
back. You'd be able to do it that way, where you look the number of clients you received in a month, and how much are under the poverty level, and then how much are not, and then you could do the split that way.
Yeah, I'm sure we could. Yeah.
Yeah, what you won't have is the documentation to support the audit.
Right.
When they show up.
Exactly.
So yeah, But if you have the client demographics, that would be the best way to do it, because that way you can tell how many were under the federal poverty level and how many were not, and then you could do federal and state and divide it up by that.
Yeah, that might be a good solution. Yeah, that's a good avenue to pursue, maybe.
Okay. If William, if you'd like to have a conversation with some people in our program side who've dealt with that kind of issue, let me know and we'll set that up.
Absolutely. Thank you.
I had a question on the accounts payable.
Okay.
Especially in a small organization, one of the issues very often with fraud is executive directors who don't have anybody checking their expenses, and I wondered how that's been handled by people, and also the notion of an executive, typically it would be an executive director, but a system where the process calls for two check signers only if it's over $1,000, say. And so the executive director commits fraud by writing a whole series of checks for $995.
Well, technically, if it's only just the executive director, doesn't he have a board governing body?
Yes.
Technically, then they should be the check signers and not him.
Okay. So the board chair or the treasurer might be the signer?
Yeah, and not the executive director if that would be the case.
But they might check in the other case, they might check the expenses and approve them?
Yes, they would approve the expenses, and then they would have to sign it. It can't be that one person doing everything, because then it doesn't look good, and there's no checks and balances, and there's no separation of duties. It has to be, if the executive director is doing the cutting of the check and signing the check, that's never a good idea.
Okay.
Okay.
Thank you.
No problem.
Next thing is when cash checks, any kind of funding, are coming in a physical manner that wasn't a wire of some sort that might have been deposited by a foundation or a funder, the one thing you need to do is create the trail once it gets into the office, especially if it's going between multiple offices or multiple people. And there should, again, be, even if there's however many people in the office, you should always have at least 2 people involved in this process. The biggest recommended thing, and one of the things we do here at our front desk, is we have a triple carbon receipt book or whatever you can get. I mean, we recommend a triple carbon because that kind of is sufficient in the way that when the money first comes in, whether it's through the mail or whether someone drops it off in the office, that initial copy that person brings in, you fill it out on there. You've got 3 copies. If that person's from another office, they can take that with them so they have proof that they dropped it off. And then your front desk person or whoever received it internally has the next copy that they can then take with that book to the person who's actually making the deposit. They can both reconcile at that point that the money's going to the person to make the deposit and sign off there. And then they have that second copy can be kept with the deposit, depending on how you do bookkeeping. Then you always have a book that has all of them showing that it made it to that last step. So you kind of are following it through. And then there's always the proof. And there was the separation, and then there was kind of the following it through and the documentation that it made it to the depositor. And then once you get back to reconciling the bank account, you can see that that amount tied out at that point that the amount you're expecting actually made it into the account or not to finalize the process.
And then again, when we send the bank, when you reconcile the bank, it technically should not be the person cutting the check. I'm sorry, it shouldn't be the person signing the checks and cutting the checks. If you have a third person doing it, it's best. But if your staff is not, if you don't have that many staff members, technically the person cutting the checks, they do the bank rec, but not the person signing the checks. So when you do a bank reconciliation, this is where you compare bank records to your accounting software records, which is your accounts receivable, cash receipts, outstanding checks, and your book balance. Now, I'm sure you guys, when you reconcile, you saw that the bank balances are different than the book balances, and this is when you have to make sure that all the canceled checks are checked off, all the outstanding checks are put in, and then you reconcile. And you have to do this on a monthly basis. And usually funders and auditors, that is the one thing they ask for is the bank rec. Other discussions we wanted to have, especially if you have federal grants, William, I'm not sure if your federal grant requires this, but usually there's a procurement procedures that you have to follow. And what we mean by this is, with us, we changed a lot of our policies and procedures in the last 2 years because of the audits we've been having and how everything is changing in the government. So procurement actually is new to us. We've done it only for like 2-3 years now, where we require 3 bids everything we purchase. For example, when we have, in the beginning of the year, we run a supply list and we send it out to vendors and have them bid on it, and we will go with the cheapest one. And we keep all that documentation, so when we get audited and they ask us for samples of procurement, we give them that procurement policy for supplies. And then if it's over a certain dollar amount, you have to put it on your website, and you have to show proof that you put it on your website and send it out as an RFP. This is what you were talking about earlier, William, about cost allocation for your grant, because you have state and federal dollars. This is where you have to look at your client demographics or your staff, how they're dividing up their hours and working, and then how you divide up the building costs according to the grants that you have. And a good thing to do for you guys on a monthly basis is actually look at your budget to actual comparison. We have, like I said, we have over 90 grants. So we actually look at them on a monthly basis. Each accountant has their own programs where they have to look on budget to actual to see where they are spending, if they're overspending, underspending, and then make adjustments accordingly. Record retention, it is important that you keep all your records for 7 years, especially for nonprofits and for federal grants and state grants. Everything needs to be kept for 7 years. Insurance, this is where we wanted to bring up fidelity bonds for employees, especially the ones who carry deposits to the bank. You need to have insurance on those employees, because if they embezzle, you are protected for the amount of money that they take from you. Credit cards. This is a touchy subject because you don't want people to have credit cards, spend, and not give you receipts for those credit card expenses. You have to ask for breakdown of each receipt. You cannot accept a receipt that just gives you the amount and that's it. You want an itemized receipt. This is where they could get in trouble with the executive director if they have a credit card and no one's watching what he spends and just pays the monthly balances. This is where you need to ask for itemized receipts every time they go purchase something.
And that's a typical fraud scenario. You know, we see dozens of examples every week of nonprofit embezzlement in the real world, and very often it's executives putting personal expenses on credit cards.
Yeah, that's one of the important parts for the dual control is there should be a separate person reconciling credit cards if you decide to use them. Separate from the person who has it, should always be a second person who actually itemizes the bill before it's paid.
And they should show you an expense report with all the backup behind it. If there's something missing, that's when you have to make them pay for that item. You shouldn't be reimbursing for something that they can't back up. This is an example that we wanted to show about an approved budget with the actual. Like we said, we do this on a monthly basis to make sure that we are spending properly and make adjustments to where we need to spend. So if we have our approved budget, our actual expenses, and the balance that we have. This happens to be an 11-month actual budget. So as you can see, we had $41,000 to spend for the last month, which was great. We are giving you guys additional resources where you can look for questions and or resources that you need. Mike was talking to us a little bit earlier, which you guys should have received. We gave you a sample of questions that the auditors asked us. We gave you one from our grant, and then we also sent you guys a sample policy and procedures. It's a little booklet, but it's something to build on, because they ask, one of the questions they always ask you is, do you have a policy and procedure manual for accounting? And that's something that should list all your policies, all your procurements, all your cost allocations, your accounts payable, how you handle it, your accounts receivable, how you handle it, everything listed. If you need help and resources on that, you can contact us. I think, yeah, we have our emails at the end, mine and Ken's. And if you guys have any questions, let us know.
So are there questions or issues that you'd like some clarification on? I have a couple things. I wanted to mention a resource called TechSoup.org. It's TechSoup.org, and they're a very good resource for how to make decisions about software and hardware, everything from donor records to fiscal issues and communications. And they also offer discounts for nonprofits for the purchase of both software and hardware. So they're a really good resource. I wanted to just ask if Mariam and Ken could speak to the issue of controlling petty cash, because I think that's also a source of difficulty sometimes, and the value of a whistleblower policy, because sometimes the people that are sort of operating in the trenches are kind of intimidated or don't know what to do when they find out the boss might be doing something that's not appropriate.
We don't like petty cash. We don't believe, honestly, in our organization, we don't have petty cash. We don't believe in it. But if it's something that you guys have, this is where auditors really look at and how you guys handle your petty cash. Like Mike said, that's where the biggest area of fraud could happen. And again, where if whoever controls petty cash has to have really good documentations, and what was taken, and receipts have to be itemized when they are returned for whatever they spent. Does anybody have petty cash? I'm just curious.
We do at the ACC. It's not something that I'm a big fan of, because if we get like facility rentals or something and people pay cash, I like immediately go to the bank with that. So I really don't like the idea of having petty cash in the box if I have to take everything else to the bank. Mm-hmm. But I mean, in terms of that, like any receipts or stuff that we use, we keep and we send it to the board president as well as to our accountant. So, I mean, there are multiple people that are looking at it.
As replenish it, if you don't mind me asking.
I've sent an approval to the board president, and show him what all was spent. Like usually we'd get a check for $500 and then keep track of it until it runs out, and keep copies of all the receipts and an Excel sheet. And I send that to the president and to the accountant. Like I CC'd the actual manager of the accountant's office and then the woman in charge of the checks. And the president will usually approve if everything is in order with the petty cash, and then we have to get a new check and keep going from there. I wonder if there's
so you keep itemized receipts for backup as well, not just like,
yeah, like we keep the originals here in the office, but I send the copies. Like I'll say it's petty cash, this was the date, this was the amount, and this is exactly what each item was for. Like if something's for the Arabic school or office supplies, etc.
I mean, as long as you keep really good documentation and itemized receipts, you should be fine as long as you can back up everything.
That's one thing that we have to do, like to get the check approved to get more funds, then we have to send that to the president, to the accountant, with like every expenditure down to the last cent.
Yeah, like we don't keep petty cash at all. The only cash we have out is if our clinic receives cash from patients, but then we have that 3-part receipt booklet where the client receives one, and then when the accountant goes double checks, receives the other copy, and the pink copy always stays in there for verification. Because when we got audited, that was one of the items we got written up on. So we changed our receipt books. We had only a 2-ply, then we went to a 3-ply.
So it sounds like petty cash is kind of an old-fashioned approach, and even if you're handling cash, you don't need to have a petty cash system. You could simply receive the cash, receipt it, and deposit it.
Yes. I mean, if it's easy, I would recommend honestly doing checks right away, but if you can't, as long as you keep really good documentation for the petty cash, you shouldn't get in trouble, but just again, keep very good documentation.
Yeah.
How much you replenish.
Our thing is like I have to wait on the board president to approve like any checks or anything, and then I have to go sort of across town like 15 minutes away to the accountant's office to get checks, and it kind of makes it inconvenient. Like we run out of print ink or something to get a check approved and then go across town and get a check and then go take that to Office Depot to get print ink is kind of inconvenient. I don't know, I don't want like there to be a liability with the petty cash, but then it's like, what is the alternative?
Yeah, like I said, as long as you keep very good documentation, you shouldn't have an issue.
Okay.
And it's like you are keeping very good documentation, so if for your organization, then by all means.
Okay, and then another question I had, I never got.
Bobby, is to establish an account at an office supply store where they'll bill you.
Okay. We could try that.
Do you have a petty cash policy?
In terms of what do you mean?
And how you handle
policy?
it?
I don't think so. I was not provided with one when I started.
Okay. It's probably a good idea to have one.
Okay.
We can look up for some resources for you and send them your way if you want.
Okay. I mean, usually it's sort of like, I don't want to say common sense, but it's like obviously we're not going to go spend it on like food or something like off the wall. Like it's usually just for office supplies or stuff for the Arabic school or even cleaning supplies.
Right.
And then the other question I had was like, for instance, our Arabic school teachers will go and get like stickers or something from the school supply store and then want to be reimbursed on the spot. And it's like, I don't like reimbursing from petty cash, even though like they give me the itemized receipt. So just in terms of liability, would it be better to just say no, even if it's like $6, it's going to have to go through the president for approval?
I think what you should do is set a policy, and then what you consider is significant enough to have a check run, or what you should, and that's what I meant by the petty cash policy. You should have a policy in place where, okay, if it's under $10, okay, you can give them the cash. If it's over $10, you're going to have to do a reimbursement and submit it and get a check cut. That's something that I was talking where petty cash policy comes into place, and where your accounting policies and procedures come in place where you can put that as a policy and just.
And you're not in a position to know what's a legitimate.
Like if somebody brings me something and I see something that's even questionable, I'll be like, that's not going to fly, so I'm sorry, but.
Yeah, but like the director of the school, assuming there's somebody in charge, would be in a position to know, is that a legitimate expense? Have we run out of money for supplies for this month? You know, what's our situation versus confronting you with that stuff?
Yeah, I mean, I guess that's the problem, is that there's not like a real director for the school, as well as I don't know if there are, I'm sure there are written policies somewhere, but it was not something I was provided with when I started, so
But you've still got, you know, if you're taking it out of petty cash, you've got to find a way to charge that expense back to the school somehow. So
I do keep like a financial journal. I keep a financial journal with the like one is strictly for petty cash and one is like revenue expense, and I put everything in there. And if it's for petty cash, I'll say that it's like office supplies, school supplies, cleaning supplies, etc.
Can I ask, is this a program that is reimbursable or like by a grant, or how's that working?
It's pretty much going through tuition monies, through like the money collected from the students and their parents.
So it's, technically you don't have like a funder coming and looking at your petty cash?
No, this is just for my own personal, like, I want to make sure that there's like no liability, since there's not a lot of people here in the week.
Yeah, I would honestly still set up a petty cash policy and have staff it, and then do a policy and procedure manual as well, and what we did is we had all our staff read a policy and procedure manual that the accounting department set forth, and that they have to abide by that. Like we have a 10 to 14 day waiting period for check reimbursement by staff.
Okay.
So, I mean, if that's too long, but you got to remember, we're talking about, we have 200 employees, so for us, that's reasonable. But if you have, like, you have to pick something that's reasonable within your organization.
Okay. Mariam, any thoughts about whistleblowing?
Well, I mean, they should always be protected. I know that it's just very important that whoever does the whistleblowing is not retaliated against. I mean, if they're looking out for the organization, then by all means they should say something.
I mean, if in the different states, I think sometimes there are state numbers and resources that could be provided if they wanted to report something. If you wanted to create a control that way, that you wanted employees to know that they could confidentially do it outside the organization, it would never hurt to make that stuff accessible in an employee location where a lot of your, whether the state required job information is posted or something. Also have that posted if you wanted to use that as a control also, where you could have that posted because it would be readily available, just knowing that someone would report it easily.
Yeah, one of the few things about Sarbanes-Oxley that applies to nonprofits is the requirement to have a whistleblower policy. So there should be an official organizational policy adopted by the board of directors where an employee is protected in going to the board of directors with, hey, there's a problem that I want you to know about. And it's anything from fraud to sexual harassment to any number of other things. And if people would like copies of those policies, we can provide them. Other questions from people on the call? So we've got the next two webinars are scheduled. September 17 at 2 o'clock. We're going to do major gifts, how to get started in that area. So that's the 17th. And then October 8th, Linda Sarsour is going to do a webinar on diversifying partnerships. So how to get new and different organizations involved in partnerships with your organization. So that's October 8 at 2 o'clock. We'd very much be interested in any topics that you folks would be interested in having